One of the stocks hit yesterday on that UK announcement of new taxes on tech was Facebook, which will be out with its third quarter earnings after the bell today. For a preview, we welcome now Paul Sweeney, U.S. Director of Research for Bloomberg Intelligence. And as we can see here, they took a hit in the last 2 days. They've taken a hit all year long, Paul. So what do they need to say after the bell today that can turn this ship back around?
Yeah, this is, stocks off 30% since the last quarter when they disappointed the street. And I would argue since the IPO, this might be the most important earnings announcement this company's had. There's a lot of, they really need to turn the narrative around for this story right now. Right now, it's all about regulatory risk, rising expenses, maybe some slowing growth, and there's just a lot of issues maybe about management as well, believe it or not. So they need a very strong quarter here, really on the top line to reestablish the narrative that this is a growth story, number one. Number two, they need to, I think, really get out there that they have a handle on their expenses and that this is not a declining margin business in the near term.
Well, and the costs, the rising costs fit together with some of the regulatory concerns, because some of the concerns about data privacy, for example, and manipulation of elections like that. And if you put those together, you can have a brand issue if you don't watch out.
Exactly right. And I think that's one of the issues here. You don't want to, it's one thing to have higher expenses associated with data privacy and data integrity. They doubled the workforce to about another 10,000 employees to monitor this. They're stepping up their R&D to really take care of the data privacy and data integrity issues. That's one thing. The concern that investors have is it does bleed over to the brand, and then the advertisers start pulling back a little bit on the margin. We haven't seen that yet, and even in this quarter, the street consensus is for about 34% revenue growth, so we haven't seen it yet. But I tell you, if we were to get any kind of softness on the top line, that would be a real challenge here for a company that's experiencing higher costs.